Welcome to the American Business Television Currency Report for January 15th, 2021. The US dollar swung a bit yesterday, but is trying to sustain a gain for the week that could be between a half to a full 1%. A week characterized by market anxiety seems to be muted now after a rally at the start of the week that certainly had a more optimistic mood. Following the release of incoming President Joe Biden's relief plan, which carries an ambitious range of expenditures plus a $1.9 trillion price tag, it seems investors and traders now worry it may lack political backing and could come up short. While Democrats gain Senate seats, it only makes the split 50-50, and there are items on the bill that may require more than just a simple 51-49 voting majority, perhaps up to 60-40. Federal Reserve Chairman Jerome Powell spoke yesterday and managed to diffuse the talk around headlines this week regarding the potential for an upcoming round of tapering. As the Fed has expanded its financial role in the markets, there was worry that a period of overall economic growth could spark too much inflation and force the Fed's hands at some point this year. Powell's comments reassured us that the Fed is indeed committed to letting inflation ride to levels beyond 2%, while also monitoring closely how an accommodative environment keeps the wheels of business alive, ideally thriving. The economy, as much as inflationary growth, has a long way to go. December figures this morning showed the Producers' Price Index advanced at the 0.8% expected. Retail sales collapsed into negative territory at negative 0.7% when zero was estimated, and the Empire Manufacturing for January came in at almost half what it was expected in terms of business activity. Industrial production and the University of Michigan Consumer Confidence Survey were also released today. Seems like the mode is to hold on to the dollar right now as indicators underwhelm. The euro could close out the week weaker as the coronavirus continues to force further lockdowns and stricter curfew across the ancient continent. Comments from European central bank officials indicate a concern with the slowdown caused by a condition that can hopefully be contained and eliminated as vaccines are rolled out. Global headlines continue to assess the distribution, and simple conclusion is that all we need is more of them and at a more rapid pace. As market momentum fades, expect the euro to be dragged down with it a bit, while also accompanied with negative news items over the political struggles we're seeing flare once again in Italy and Spain. More elections are coming down the line at the time when the governments need to agreement on how to spend funds from the €750 billion rescue package agreed on last summer. The pound has gained 1.2% value for the week as traders welcome the news that the Bank of England will not be looking to implement negative interest rates soon. The negative outlook for trade life after Brexit has many thinking the Bank of England will need to act, and with interest rates already at 0.1%, there's no other place to go than zero or below. Switzerland and the Eurozone and Japan have exercised some form of negative rate, deposit requirements, etc., but with little positive outcome or influence growth. There is not a lot of optimism over the British economy, especially with indicators such as November's industrial production showing a deeper contraction than expected. Thank you for joining us, and please check back next week for the next edition of the American Business Television Currency Report.